Hello everyone, welcome back to our past paper discussion sessions for Advanced Audit and Assurance Level exam. I hope you all remember that in our previous two classes, we covered question number 1 and question number 2 of this March-June 2026 exam attempt paper. In our today's class, we'll be looking at question number 3, which is the last question of this exam paper. In this series of past exam paper discussion sessions, we are looking at complete attempt exam papers, and we'll be covering almost 10 complete attempt exam papers, and we'll be discussing all of them in detail. These past paper discussion sessions are really important in finalization phase of your exam preparation, as it gives you an idea that how you have to deal with all of the topics together in your actual examination in a time restricted situation. Once done with this series of past paper discussion sessions, I will be giving you guys 3 mock exams which you have to attempt on your own and send me for checking and feedback. And believe me, this approach of mine has always resulted in great results of my students. And this is the reason why around 40 of my students have nationwide positions in this examination. So now let's deep dive into this question. It's question number 3. Now, when we look at this question, we'll be covering the introduction, the exhibit, requirement, and then most importantly, we'll draft the entire answer during our class discussion. So it will be a detailed session. Your patience and concentration will be important. But believe me, once you will look at this class, you will gain a lot of understanding that how you have to approach a question in the examination. Let's look at it. It is 1st July 20X5. You are a manager in Latika and Company, a global firm of chartered certified accountants, and you are responsible for the audit of Jamal Company, a listed company. Jamal Company's principal activity is the manufacture of pharmaceutical products operating in a highly regulated industry. So he's just introducing us with the question that we are working in Latika Company. The client is Jamal Company, listed company involved in pharmaceutical products. Okay, fair enough. When you read the question for the first time, it's important that you read it with patience. Always remember, every question is easy. At least passing marks in the question are very easy. It's always how you approach the question, how much patience you keep while reading the question. Jamal Company's financial year end on is 31st March 20X5. The audit is nearing completion and you are reviewing the audit files. The audit supervisor has brought several matters to your attention which are described in Exhibit 1, which we'll read it. The following exhibit available on the left hand side of the screen provides information relevant to the question. File information matters for your attention, which we'll obviously read. The information should be used to answer the question requirement within the response option provided, which is word processing. And obviously, when we'll solve the entire question, you will understand it in a much better manner. Okay, so our question name is Latika and Company. Okay, and we will be solving this question on this word processor document. Okay, so when we'll read the exhibit, we'll be looking at the requirements, and when we'll actually solve it, you will understand that how these response option tools are used. So let's look at it. The draft financial statements recognize profit before income tax of $100 million. Last year it was $129 million. Final materiality for the audit has been set by the audit engagement partner at $5 million in line with Latika and Company's internal quality procedures. The directors of Jamal Company receive a bonus based on the company profits and are reluctant to make any changes to the financial statements owing to the late stage of the audit. So we are given with the date of profit, materiality, and a very important thing that directors are not willing to do the adjustments. And since they get profit related pay, so there is a high chance that they will be willing to show better results of the company. Now let's read part A, expired inventory. During the year-end inventory count, the audit team discovered a large quantity of medicine products which expired 3 months ago. The finance director has refused to write down the inventory as she believes that the products are still effective and can be retested and repackaged to avoid disposal. The value of expired products is $7.2 million. It is a simple misstatement. Okay, so as per IS2, what we need to do is that this inventory need to be written off because we need to record it at its lower of cost or net realizable value. And since it has already expired, so net realizable value will be zero. So it need to be written off. And even if I agree what finance director is saying that okay, they are still effective and we can retest and repackage them. So then in that case, we need to look at its net realizable value. Okay, there will be some cost to sell. But for that, we need an expert opinion. Okay, like whether is it possible to use expired medicine? But in a normal circumstance, when a medicine has expired, it should be written off. So what finance director is doing is wrong. And if we look at this misstatement, it also exceeds the materiality level. And since it is exceeding the materiality level, this misstatement is material to the FS and it will lead to a qualification, a qualified audit opinion. Obviously, it's not material and pervasive, but it is material. Okay? It's not material and pervasive that we give adverse opinion. It has exceeded materiality level. It's material, but not pervasive. So auditor will give a qualified audit opinion. Okay. And yes, this needs to be corrected. Part B, legal claim. So I believe part A is a simple adjustment and I believe this question would be like matters to consider type question. Okay. So if we look at the requirement also so that we can cover it along while it's reading, evaluate the matters to be considered to the prior to the completion of the audit and the audit evidences you expect to find during your review of the audit file regarding inventory, legal claim and consultancy fees, 15 marks. Okay, so it's a simple 5 marks on each of them. You need to talk about matters to consider and audit evidences. Like I would say, it is one of the routine requirement which come in the examination. Matters to consider and audit evidences is one of the routine requirement which you see in your examination. Okay, so part 1, expired inventory, part 2, legal claim, and part 3, consultancy fees. Okay, a very routine requirement in which you need to talk about matters to consider and audit evidences. Now, what I'm doing is that rather than reading all of them together, I will solve them one by one. Okay, the first one is expired inventory. I want you all to listen to me carefully. Okay, now for the expired inventory, the issue is of $7.2 million. It exceeds the materiality level of $5 million. So it's material but not pervasive to FS. Now, if you remember matters to consider, what we do is we write the correct accounting treatment. Then, first of all, we talk about the materiality level. Sorry. First of all, we talk about materiality level. Then we talk about correct accounting treatment. Now, in correct accounting treatment, you can go in detail, like this write-off thing. And if he thinks it can be retested and repackaged, so we need to consider that whether any expert opinion or any past practice is available, what will be the cost to sell and all. So in matter to consider, you look at the correct treatment in detail. You comment on the management, you write heads affected, and then if any audit evidence is required, as the question asked about. So it's like a very routine requirement. Okay. Issue relating or matter relating to expired medicines included in the inventory worth $7.2 million. It exceeds materiality level set for Jamal Company audit of $5 million. Therefore, this issue is material to financial statements. Okay. First of all, you comment on the materiality of that matter. Now, what is the correct treatment? Okay, expired medicines need to be written off from the inventory of Jamal company. Okay, normally expired medicines will have a zero net realizable value, will have a zero net realizable value. Therefore, an adjustment, or I would say a reduction in inventory and an expense of $7.2 million need to be recorded by Jamal company. Okay? If the claim of finance director, uh, and I would say if the claim or for the claim of finance director, that these medicines can be reused after retesting and repackaging, our firm need to consider any expert opinion or past practice relating to it. Additionally, relevant regulations also need to be considered, that whether it is permitted or not. Okay, if it is possible, then net realizable value of inventory will be evaluated after considering selling price and cost to sell to be incurred in terms of retesting and repackaging. I will repeat the things again also. Okay, if this net realizable value will be below cost, then a write down adjustment will be required. I will repeat it again. See, first of all, we commented on the materiality. Then we said that simple as per I is to, if you want, you can give the reference of the accounting standard number, but it's not mandatory. You said expired inventory need to be written off like zero. So an expense of $7.2 million need to be recorded. But even if we say, okay, the finance director claim is okay, like it may be valid, so we need to look at additional regulations or expert opinion or past practice, because then only we can agree to that. And then we look at the net realizable value of the inventory. Okay. Finance director's failure to do any adjustment relating to relating to expired medicines and keeping them at cost in inventory is wrong, and it will overstate profits in inventory by $7.2 million. Okay, so materiality, correct accounting treatment, you discussed two on that, and comment on the management and head affected. What additional audit evidence you can expect? Okay, audit evidence in relation to it can be, okay, like you can write two audit evidences or one audit evidence. Now it's 5 marks each. Okay, total are 15 marks, 5, 5 and 5. Now it matters to consider an audit evidence. It's 1 mark for each of the comment. 1 mark, 1 mark, 1 mark, 1 mark. So you are done with 4 marks. You can write one audit evidence only. Or if you want, you can write one extra also. So what can be an audit evidence here? Okay. Minutes of discussion with management to gain further detail about basis of finance director claim that expired medicines can be resold after retesting and repackaging. These bases of management claim can include extracts of relevant regulation, past similar transactions, and expert opinion. Okay. So we need to get the basis of the finance director claim because he has made a very odd claim that, okay, I will sell the expired medicines. So we can have a discussion with the management. What else we can have? We can have details about the systems or inventory management systems of Jamal and company, that how they monitor the expiry dates, because we have found some expired medicines. So maybe there are other expired medicines also. Okay. So I would say extracts of management system reports, extract of management system reports and systems in order to gain detail that how Jamal and company monitors expiry date of medicines, as a possibility exists that other expired medicines are also included in the inventory. Okay, like how you monitor the expiry dates, what systems you have, or we can do a physical visit also. Okay, like evidences of physical visit, like maybe site visit evidences, where we have some photos or something to verify that these expired medicines were separated from normal inventory. So the problem is that there is expired inventory included in their records. And the problem is that finance director is not willing to adjust it. So first you commented on materiality, you wrote the correct treatment, you commented on the management treatment, and you included two audit evidences. Maybe further evidences can be like some invoices to gain detail about the cost which need to be incurred on retesting and repackaging. Okay, the finance director is saying there will be repackaging and retesting. Okay, tell me what will be the cost. Show us the expert opinion report. Okay, or maybe we can have detailed inventory records as an evidence to ensure that there are no other expired inventory included in their inventory records. Okay, so matters to consider and the audit evidences relating to the inventory. Okay, coming back to the scenario, I believe like this part was a very easy one and a very routine requirement. Now, the legal claim. The audit team reviewed correspondence dated March 20X5 from Jamal Company legal advisors relating to a group of customers who have made legal claim against the company. Okay, so when there is a legal claim, IS 37 provisioning. The customers state that they have suffered adverse reaction to one of the Jamal Company new product, which they were not warned of an associated product information. As a precaution, the new product has been suspended from sale while Jamal Company investigates the possibility of the claim being proven. The investigation is likely to last until the end of August 20X5. There is a trivial small amount of new product currently in Jamal Company inventory that also need to be removed. No accounting entry or disclosure have been made in relation to legal claim, including the associated legal fees. So again, they are doing a wrong treatment. When a claim has been filed, so present obligation is created. Now, based on the probability of the outflow, we need either to book a provision or we at least need to give a disclosure of this matter. Okay, we don't know the amount of this legal claim, so we cannot comment on its materiality. We cannot comment on its materiality, but we will write the right treatment, we will talk on the management treatment, and we'll talk about the audit evidence. So now the second one is legal claim. Okay, in relation to legal claim filed by customers against Jamal Company, implications of IS 37 provisions and contingent liability need to be considered. Now see, I have written the answer in two different forms. In this part, I didn't give reference of IS number. In this part, I gave it. So what I'm trying to say is that it's completely up to you. If you are very much confirmed on the standard number, give its reference. If you're not confirmed, no need. Just write as per accounting standard. Okay. Now, claim filed against the company. Claim filed against the company creates a present obligation based on the chances of outflow. Chances of outflow, impact on financial statement need to be determined. Okay. If chances of outflow are probable, then a provision will be required in relation to it. However, if chances of outflow are just possible, like below 50%, then a disclosure note need to be given in relation to it. Let me repeat it again. See, in relation to the legal claim which is filed against the company. So when a legal claim is filed, it creates a present obligation. If the chances of outflow are probable, like more than 50%, that we will lose this claim, then we need to record a provision. However, if the chances of outflow are possible, like below 50%, then just a disclosure note need to be given. Okay. Now see, what is your year end? If I look at the year end, it's given in the introduction screen. My year end is 31st of March 20x5. Now this means that at the year end, this claim existed. Correspondence dated March 20x5. So this claim existed, but the investigation will go on till the end of August 20x5, which is after the year end. But if the chances of outflow will exist, we'll need to record the provision if it is probable. But if the chances of outflow are possible, then a disclosure note will be required. Okay. Management of Jamal company have not given a disclosure note, nor they have recognized a provision in relation to it. Okay. This will misstate financial statements. Okay. If disclosure is not given, which is at least required in this situation, then notes to the financial statement will be misstated. Okay. See, if provision is not required, like if the chances of outflow are not probable, but at least a disclosure note is required in this situation. And failure to give disclosure note will misstate the financial statements. We don't know about the amount of the claim, so we cannot talk on that currently. But one thing we are sure is that a disclosure note should be given in relation to it. Are you getting it? What audit evidences you can expect in relation to it? Evidences expected in relation to this legal claim include, okay, extracts or copy of investigation report if completed in subsequent period of the year end. Okay, this will help in determining chances of outflow which existed at year end, and accordingly its treatment in financial statements. Okay, because the investigation report will be completed in the subsequent period, or if any correspondence is done, copy of correspondence with the affected customers who have filed claim against the company. If any settlement is reached or claim is withdrawn, then this may also impact the provisioning and treatment of this claim. Okay? Copy of investigation report if that gets completed, copy of correspondence with affected customers, maybe a copy of legal opinion because it's a legal claim, that what lawyers think in relation to this matter. What is their opinion in relation to this thing? Are you getting my point? So copy of correspondence with lawyers can be a good evidence. And most importantly, we need to have an evidence that whether the remaining inventory in relation to it is removed from Jamal company's records. Because if it still remains, then the claim against the company will get more serious. Are you getting my point? So these can be the audit evidences which you can expect in this situation. Or maybe you can have audit evidences in relation to relevant regulation. Okay? Extracts of relevant regulation in order to determine that whether in auditor's opinion, liability of the company exists or not. Okay? See, auditor will take a legal opinion, but auditor himself also looks at the relevant regulation because okay, he also knows English, he also need to read, he can read it, understand that okay, whether it is the responsibility of the management or not. What is the auditor's opinion in relation to it? Okay, there can be minutes of discussion with the management that how they are planning to deal with this matter. Okay, it can be in addition. It can be in addition to legal opinion which auditor can have on this matter. So there can be a lot of evidences through which we can determine the chances of outflow of this legal claim and verify the stance of the management. Coming back to the scenario, consultancy fees. Jamal company is in the process of launching a new seasonal allergy product. To support this launch, the company engaged several consultants for strategic advice on regulatory approval, marketing strategy, and distribution channels. The consultancy firm which was used, Boyle Consulting Company, is owned by the chief executive's brother, related party transaction, and was hired to provide expert advice on global marketing strategies for the product. A simple related party transaction. Close family member of key management personnel. Boyle Company's fees of $500,000 are significantly higher than market rate for similar services, and the consultancy work done appears to be less substantial than what was initially promised. However, Jamal Company continues to pay the agreed upon consultancy fees on time and without any documented review of the work completed. The financial statement do not refer to the consulting fees. It's simply a wrong treatment. As per IS 24, related party, you have to give a disclosure that okay, this was a related party transaction with close family member of the key management personnel. We are paying $500,000 to them, and it is not an arm's length transaction because we are paying higher than the market rates. And related party transactions are qualitatively material to the financial statements. Related party transactions are qualitatively material to the financial statements. Okay. So consultancy piece is the third matter and a very easy requirement. Materiality. Okay. Consultancy fees matter is a related party transaction Therefore, it will be considered as qualitatively material to financial statement irrespective of its amount. It's material, but you don't call it material and pervasive. It's material. And if you will not give a disclosure, it will lead to a qualified audit opinion. Now, why it is a related party transaction? What disclosure you have to give it? Let's look at that. So I believe that this question is an easy one. Okay, let's craft it. Now we are going in detail of the correct accounting treatment. Okay, the consultancy service which is being taken, Boyle Consulting Company. So it's a related party transaction because it's owned by chief executive's brother. Okay, consulting services taken by Jamal Company from Boyle Consulting Services is a related party transaction as Boyle Consulting is owned by Chief Executive Officer's brother. Okay, it is owned by close family member of key management personnel. Okay, so this makes it a related party transaction. For related party transaction, a disclosure note will be required in financial statements explaining that what transaction it is, how it is a related party transaction, its amount of $500,000, and the fact that it is being done on non-arm's length basis. Okay, so a disclosure note need to be given in relation to it. Management of Jamal Company has failed to give a disclosure of this transaction in financial statements, which misstate notes to the financial statement, head of financials of FS. Okay, see, disclosure note is given in notes to the FS. Now there is a big confusion. Some students don't consider a misstatement in notes to FS as a misstatement. That is wrong. See, income statement, SOFP, cash flow, changes in equity, and notes to the accounts. These are 5 components of FS. And if you fail to give disclosure, that will also misstate FS because it's notes to the financial statement, which is a component of the financial statement, one of the 5 components. So you commented on materiality. You commented that why it's a related party transaction. You commented that what need to be included in related party disclosure note and what management is doing. Now, evidence expected in relation to it include, okay, now you can include one evidence also, that will also be sufficient because your marks will be completed. Now, see, first of all, always understand, see, accounting has nothing to do that whether you are paying significantly higher or whether the work is done correctly or not. What accounting says that record the transaction, and since it's a related party transaction, give a disclosure of it. That is what the accounting is concerned. It's not a taxation world that why the transaction is not arm's length. You are not doing not arm's length, just disclose it so the shareholders can know it. Now, what evidence can be in relation to it? So, you can get the copy of the contract which is done with Boyle Consulting, their scope of work and what services they are doing, market quotation for those services, because that will help us determine that whether this transaction is an arm's length transaction or not. Then you can have a board approval for this. Okay, so I can write extract of board minutes to verify that whether this related party transaction was approved by board of directors of Jamal Company or not. Okay, because related party transactions need to be specifically approved. Okay. Copy of quotations obtained by Jamal Company in relation to services obtained from Boyle Consulting in order to verify that whether transaction is arm's length or not. Because when you will say that transaction is non-arm's length, so the management will say how you are saying. So there need to be copy of quotations, quotations from other vendors, copy of quotation from different vendors. Okay. So that we can verify that what contract they did with Boyle Company was an arm's length contract or not. If I look at this question, believe me, these 15 marks were very easy. Like from accounting perspective also, they were very straightforward. Expired inventory, simple IS2, then legal claim thing, and then came the consultancy piece. Now see what he's saying. Completion update. It is now 1st August 20x5 and the auditor's report on the financial statement for year ended 31st March 20x5 is due to be issued in next few days. You are considering the form and content of the auditor, following the discussion with the management and confirming that appropriate adjustments have been made to financials. You are satisfied that consultancy fees are now correctly disclosed. Like from these three, consultancy fees issue has been resolved. Management has indicated that they are not willing to make any further adjustment to financial statement in respect of the expired inventory or the legal claim. Now, using the information in the completion update and the exhibit, explain the implications for auditor report, justifying an audit opinion when considering the impact of these two issues. 5 marks. What will be the impact on the auditor's report? Let's look at it. It's not a difficult one. Now, he has said that the consultancy fees issue has been resolved. So, unresolved issues are in relation to expired inventory and legal claim. Okay. Aggregate impact of two unresolved issues in financial statements of Jamal Company worth $7.2 million, which represents the misstatement in relation to inventory. Okay. Misstatement in relation to legal claim is not quantified currently because possible amount of claim or possible amount of settlement payable is not yet determined. Okay. Therefore, misstatement of legal claim will impact disclosure notes. Okay. But currently we don't know its amount. The question has not given it, the management has not. So currently the misstatement which exists is in relation to the inventory, and that was that misstated inventory which was $7.2 million. Okay. Now misstatement of $7.2 million exceeds the materiality level of Jamal Company audit of $5 million. Okay. As it is a material but not pervasive misstatement, therefore, a qualified audit opinion will be expressed. Okay. It will state that financial statements as a whole represent a true and fair view except for misstatement in inventory and a disclosure note in relation to legal claim. See, sir, why it is material but not pervasive? See, pervasive is when we say that financial statement has become meaningless. Now, for obviously $7.2 million, you will not say that financial statement has become meaningless because their profit is 100 million. It's not like 80% getting misstated. It's material because it exceeds materiality level, but it's not pervasive. Okay. Heading of opinion paragraph will change to qualified opinion, and heading of basis of opinion paragraph will change to basis of qualified opinion. Okay, this is what happens whenever the opinion gets qualified. So first we commented on the aggregate impact. We commented that what the opinion will be. Okay, then the headings get changed. This is how you deal with a question when it's in relation to the audit opinion. What are the implications for the auditor's report? Are you getting my point? Whenever the question is about that, what are the implications for the audit report? This is how you deal with it. Like you say, okay, what is the aggregate value of the impact? You talk on that. You talk on the aggregate value impact. Then you say that what the opinion will be. Okay. It's material but not pervasive. Okay. Now, in basis of qualified opinion paragraph, you will explain that what this misstatement accounts for. Okay. Now, in basis of qualified opinion paragraph, in basis of qualified opinion paragraph, additional detail will be included about the misstatement done by the management. It will include detail of the issue, correct treatment as per the auditor, okay, management's treatment done in relation to it, okay, heads of the financial statement which have been impacted, and the amount of the misstatement cost. Okay, see, in basis of opinion paragraph, you already give reference of the auditing standard, of the ethical standards which you have used. But along with that, now you will also include the details of the misstatement which has happened. So using the information in the completion update, explain the implications for the auditor report. Okay, so first you commented on aggregate impact. You commented that what your opinion will be, what it will state, the heading and the detail in the basis of qualified opinion paragraph. Done. And with this question is done. See, it was that much simple. Like, I must say that this question was a very easy one. Matters to consider: audit evidences and the impact on the report. Expired inventory thing, very easy approach. Then legal claim, then consultancy piece, and about the auditor report. So I believe that this question on overall was an easy question. Now, if I look at AAA exam paper of June 26 as a whole, if I talk about this whole exam paper, I believe question number 1 was very easy. Question number 3 was very easy. Yes, question 2 was a bit abnormal question, like it was a bit non-routine one. But this is normal. You can expect that much level of difficulty in your examination. That's normal. So with this, our discussion on June 26 paper of Advanced Audit and Assurance is done. I hope that you guys have understood it. These sessions are adding value to your preparation. But if you have any query, you always have my direct WhatsApp number to contact me. This series of discussion sessions will continue on. We'll be discussing 10 complete attempt past papers. You can always connect with me on my WhatsApp number for any guidance or help you need. Okay? Thank you, everyone.